if you want to make a good investment, you should buy something scarce and desirable that, that someone richer than you and more cultured than you and smarter than you will want to buy from you in a decade. And that's what I think of when I think of Bernard Arnault, someone richer than me and more cultured than me, and I wonder, would he want to buy this thing? And clearly $10 million worth of hotel space in Zimbabwe probably may not be that appealing. And you never know with real estate whether the person you want to sell it to is going to want to buy it. And of course, people can make more real estate. They certainly can, you know, not all land is scarce. I mean, the beachfront property is, but farmland in Kansas isn't. There's plenty of land in the middle of Australia that isn't nearly as desirable as the Botanic Gardens in Sydney Harbor.
What a remarkable month it has been for the leading cryptocurrency. In just 30 days, its value surged by over 30%. At the onset of October, uncertainty loomed as questions arose about the typical positive trends associated with October. The situation in the Middle East added to the apprehension. Despite these challenges, Bitcoin, demonstrating its resilience throughout the year, defied bearish conditions. Mike Bell, the chief executive officer of the cryptocurrency exchange BitGo, is optimistic about the future. He suggested that all signs point toward a favorable outcome for a spot Bitcoin exchange-traded fund. However, Bell emphasized that the path forward will not be without its challenges. In an interview on November 16, Bell explained that discussions between firms seeking Bitcoin ETF approval and the United States Securities and Exchange Commission indicate a positive trajectory. He holds the view that approval is imminent. In a separate video, Michael Saylor delves into Bitcoin mining and ETF approval. Even with approval, Saylor asserts that MicroStrategy maintains an advantage in providing top-notch Bitcoin services, as ETFs come with associated charges. The video explores these insights further.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
The ETF, a spot ETF definitely increases appetites in general because right now, in order to buy Bitcoin, you have to set up a relationship with the crypto exchange. And most institutional investors don't have a crypto exchange relationship, and most retail investors don't have one. And most of the time, they don't want to add a new one. It takes 10, 20, 30 years for them to establish these relationships. So when the ETF comes on, you know, you could think of an ETF kind of like like a website, like an internet address. It's like, does your company have a URL or an internet address? If so, it's easy to find you. If not, it's really hard to find you. I can find a website in Australia in about 5 seconds with the URL, and it might take me, 3 months to come there and knock on the door. So ETFs are like the universal protocol of access for financial assets. They're revolutionary. If you don't have the ETFs, it's probably, to say it's 100 times harder to buy would be an understatement. It might be 1,000 times harder. And it's not just because of that, but the other catch is, it's not just 1,000 times easier to buy Bitcoin by an ETF, it's also free because I can finance the deal. If I'm an investor, I could pick up the phone and buy $1 million worth of Bitcoin in about 15 seconds and put up not a dime because the bank, JP Morgan or Morgan Stanley, will loan me the money. And so you're talking about opening the floodgates to hundreds of trillions of dollars of wealth where they can buy it in an instant and they can finance it and they can buy it no money down. And so right now, and after they bought it, they can borrow against it. And you got to contrast that to the current situation where it takes me a year to set up the account. I have to come up with the cash and I can't borrow against it, and everybody criticizes me, and then I worry about the crypto exchange failing. So, that's going to be a big change for the industry. It'll be good for everybody, and it's definitely going to be a big boost for Bitcoin. As for MicroStrategy's position, if you look at the futures ETFs, the reason people don't like futures ETFs is by the time you're done with it, they've charged you 10% fee a year. I mean, the cost of rolling the futures is not 1% or 2% a year. It's like 5 or 10 or 20% a year. It's obscenely expensive to cover this with futures. So the spot is going to be a 50 basis point or 100 basis point or something. But let's say 50 basis points. there's a fee to a spot ETF. And over the course of an infinite duration asset, if I charge you 1% a year, that's like taking 20% of your money. 1% a year over the course of 30 years, discounted back with normal interest rates, is like you invest $1 million and you give me 200,000. That's the cost of 1%. The cost of 50 basis points is 10% of your money over the course of the infinite duration. So these ETFs, they charge a fee and they have no leverage. They're unlevered and they charge a fee of some sort. MicroStrategy doesn't charge a fee. We don't charge 50 basis points. We don't charge anything. We basically provide that acquisition and custody service and cover it with our operating business. So we don't charge a fee. We are levered. We use leverage. So we borrowed $2.2 billion at 1.5% interest to buy Bitcoin. If you can borrow $2 billion and pay 1% interest and buy Bitcoin, I would recommend you do it, right? That's not a bad idea. You probably would do it. We actually borrowed $1 billion at 0% interest. And so if you could borrow $1 billion at 0% interest and buy Bitcoin, you probably ought to do that too. But if you can't do that, you can invest in MicroStrategy.
Marathon stands out as the largest public miner based on hash rate, boasting an impressive 19.2 exahashes per second online. Additionally, the company holds the title of the most substantial public miner in terms of Bitcoin ownership, possessing a stack of $396 Bitcoins valued at an estimated $474 million at current market prices. According to reports, Marathon has significantly increased its Bitcoin production by 467% in just 1 year, expanding its hash rate from 7 exahashes per second a year ago. This substantial growth has propelled the company from producing a modest 616 Bitcoins in Q3 2022 to an impressive 3,490 Bitcoins in Q3 2023. However, the company has signaled a shift in strategy by expressing its intention to engage in international joint ventures. This strategic move aims to position Marathon as the most geographically diversified miner, with the potential to gradually reduce production costs over time. Now, let's turn our attention to Michael Saylor's insights on Bitcoin mining.
Bitcoin mining is really amazing, right? We're up to like 460 exahash now. So the mining, the power of the network just keeps getting greater and greater. It's growing 70% a year on average through bear markets and bull markets. The Bitcoin network is secured, in my opinion, by 4 things. It's secured by electrical power, electricity, like 15 gigawatts of it. It's secured by hash power, computer power, 460 exahash. And that is all the computer power of the world. All the computers in the world that are not Bitcoin miners, if they all started hashing Bitcoin, I don't think they would reach 460 exahash. So it's a lot of computer power, but it's also secured by economic power. There's more than $500 billion that have been invested in the Bitcoin network, and the holders that have invested that money are going to defend the network politically and otherwise. Right? A company like MicroStrategy's invested, $4.6 or $4.7 billion. Before someone screws up the network, you can imagine that all of our lawyers and all of our finance people and all of our technologists and all of our engineers are all going to be doing something about it. And we're not even 1%, right? There's 100x more than us out there, and those people feel strongly too. So economic power matters. And then finally, there's just pure political power. There's 220 million people that have Bitcoin exposure. And 220 million people is a lot of people, a lot of voters, and they all know politicians, and they all know corporations, and they're going to fight. So when you think about all of those actors, and they're all running nodes, and they're all operating mining rigs, and they're all talking and doing things, that's a lot of security, and it's it's a multi-dimensional form of security. It's not just mining. But my views on mining is Bitcoin mining hash rate's going to continue to expand. It's going to spread to the 4 corners of the earth. Every place someone has stranded energy, stranded capital, every place where they want to plug in, they're going to look to Bitcoin mining. Bitcoin mining itself is going to be the primary beneficiary of transaction fees, and long term, the security of the network is going to be driven not by the block rewards. I mean, they will be a primary factor probably till 2035 or so, but in 2035, 99% of the block rewards have been delivered. And the network sometime between now and then is going to transition to transaction fees that are going to be driven by demand, for that very scarce block space. And I think those fees they will move into a growth mode and then a hyper growth mode. And when the transaction fees are growing faster than the hash rate, then Bitcoin mining is going to explode in profitability and blossom everywhere in the world. So I think that when I look at Bitcoin mining and I look at transactions, I really focus upon, what are the transaction revenues relative to the block reward, and that determines how you make business decisions.
On November 17th, Bloomberg analyst Eric Balunas reported that securities regulators are providing specific instructions to applicants seeking approval for spot Bitcoin ETFs. According to Eric's post on X, there is speculation that the Securities and Exchange Commission's Trading and Markets Division engaged with exchanges this week, advising them to opt for cash crates rather than in-kind transactions. The SEC has allegedly requested applicants to submit amendments in the next couple of weeks. This approach, involving cash crates, is deemed preferable for spot Bitcoin ETFs, as broker-dealers cannot directly deal in Bitcoin. Eric estimated that only 2 or 3 of the current spot Bitcoin ETF applicants plan to choose cash crates, potentially prompting other firms to adjust their filings to comply with the rumored instructions. Despite the uncertainty, Eric maintained his prediction of a 90% chance of spot Bitcoin ETF approval by January, viewing the recent development as a positive sign. However, he did not disclose the source of the rumor, and the SEC has shared limited details about its interactions with ETF applicants. The SEC has been seeking input on various ETF applications since late September, with a decision expected by early next year, including ARK Invest's application deadline of January 10, 2024. Share your thoughts on ETFs and the SEC's rumored new rules based on the filing in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.